Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, January 3rd, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Let's take a look at the big picture, work our way into the day itself as usual. This had been a 3 to 5 week objective following a buy signal, I don't know, a couple of months ago, maybe a little bit less. And what I'm talking about is this descending channel top that is at 259.38 for the entire week. The same formation on the daily chart, by the way, is 257.69, forming a range of resistance that was tested last week. We came off of it. It can contain buying through January, possibly the balance of the first quarter. And from here, we can fall over the next 2 or 3 to 5 months, all the way back into the low 180s and dropping. And there's no clear indication that we're going to test that lower area. But just with respect to channel dynamics, you have to respect the market's tendency to honor these parameters. And we've tested a significant overhead resistance. This goes back to the July high, a 6-month channel top. And we can, over the next 2 to 3 to 5 months, fall into the low 180s. You can prepare for that. You can trade that. You can play the short side. You could reach out for 175 out of the money puts that don't expire for at least 6 months or maybe even a year. And that is something I've been saying now for the last few weeks. But what I am holding to as a target, as an objective, is the 220.69 rising channel bottom. So this is the same structure, but on the daily chart. And I mentioned a moment ago how 259.38 is 257.69 on the daily chart. Same exact formation. We tested it. We even closed above it one day last week, only to fall back the following day, which underscores the importance of being patient and waiting for those weekly settlements above these key structures by a full 1% degree. I'll get to that in a moment. But what I do want to drive home is the fact that, holding below 257.69, I do maintain a 220.69 3 to 5 week downside objective. I think that is realistic. And from a 228.69, we can bottom out into possibly through February and round back up into the upper 250s and continue filling this wedge out for the next 3 to 5 weeks, couple of months. It would be a settlement below 220.69 that would clearly set up for an upper 170s 3 to 5 week objective. But as I said earlier, I think you can look for that 3 to 5 week downside possibility in the 180.70 and dropping region, holding below 259.38. And that is that, and that is that. Now let's talk downside. For today, we do have this rising 1/3 speed line that we came very close to testing on Tuesday, and it can continue to contain daily selling pressures, and from here we can rally back up perhaps today to 257.69, although I think respect can still be given to the low of the high from last week, that key reversal high. That low is 252.71, still an intraday resistance level, able to contain intraday buying pressures below which 245.03 is in reach. But I did, have been mentioning how for those of you who like to trade both sides of the market aggressively, 3 to 5 day swing traders, you could have a go at 245.03. Maybe you did yesterday when we closed in on it, because above 245.03, this market can over the next few days push into that 257.69 to 259.38 region. And that's possibly on an intraday basis if we happen to push or open today above the 252.71 low of the high. Once again, 257.69, this descending channel top, part of a range of resistance on the weekly chart up to 259.38 that can absorb buying into February, possibly through the first quarter. And from here, we should fall into the 220s over the next 3 to 5 weeks, as I mentioned earlier, and into the 170s over the next 3 to 5 months. On the other hand, if we were to close this week Friday above 259.38 by a full 1% margin, that is a 261.97 Friday settlement or higher, I see a 2 to 3 week rally to the 285.87 formation and a 3 to 5 month rally to the 350.78 formation. So near-term swing traders can go long with a weekly settlement above 259.38, anticipating the mid 280s and climbing. And near-term investors, 3 to 5 month investors, can go long above 259.38, anticipating this 350.78 and rising channel structure. Let's go back to, I'm going to show the same, that near-term target that I mentioned here at 285.87. You can see on the daily chart, where are you? How it all lines up well. This former channel bottom at 286.96, this rising channel top at 283. This is our 2 to 3 week target if we close above the upper 250s. Where this market should have trouble for at least a week and perhaps fall off into February. As I've been mentioning many times over the recent few weeks, we could fill this widening wedge out for 3 to 5 weeks. Following a settlement above 259.38, 285.87 within 2 to 3 weeks, we could fall all the way back into the upper 250s from there within 2 to 3 weeks. We could spend a month and a half or so before then presumably continuing onward and upward to 350.78. Let's cover the downside a little bit more properly because that is the path of least resistance right now following the testing of this upper 250s resistance, and that is to say that 245.03, while it may well contain daily selling pressures, we are expecting its ultimate violation. And if we break or open today below 245.03, 236.25 not out of the question. As a possible intraday target. 236.25 can contain weekly selling pressures. And this is where, the 2 to 3 week, I would say more like 1 to 2 week swing traders can have at 236.25. Maybe you're already short from the upper 250s last week, holding out for 236.25. And if you do, reel in your short positions at 236.25, you can actually reverse. If you're a 1 to 2 week swing trader, you can reverse at 236.25 because we could be back into the upper 250s by the end of next week if we test 236.25 today. But I will still hold to the 3 to 5 week objective at 220.69. I do think it's realistic. The question is whether we bounce at 236.25 for a week or not. We could bounce here for a day, and the very following day close below 236.25, and then 220.69 becomes a 1 to 2 week objective in itself. 220.69, if tested over the next few weeks, able to contain selling once again through February, and we can round back up into the upper 250s following a test of that. I think that pretty much rounds it out. I can't think if there's anything else I need to say. I'm going to leave it at that. In fact, I will leave you with this chart here because it includes 252.71 as our intraday upside pivot point. Until then, holding below at 245.03 in reach, able to contain session weakness. And if we break or open today below 245.03, our 1 to 2 week objective at 236.25 is attainable today. Last thing I'll say is if we close today below 245.03, we should test 236.25 tomorrow if we don't test it on an intraday basis today. That is all I've got for Wednesday's Tesla Report. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. And we will be back tomorrow with Thursday's Tesla. You have a great day.